Welcome back to another episode of the Stoic Trading Psychology Podcast. Just so everybody knows who's listening to this in podcast form, I started a YouTube channel posting videos of these podcasts called the Stoic Trading Psychology Podcast. So make sure you go subscribe to that YouTube channel so we can get this sound advice out to beginner traders, because there's so many fake gurus out there promoting crap with trading and these terrible, basically borderline lies, saying you can make $100 a day, turn to $500. I saw some girl trader, not going to name her names, I think we all know who it is. She turned $500, I think, into $500,000 trading, I guess. So, which is absolutely, like, she should be getting she should be getting calls from the greatest hedge funds of all time. I mean, they're making, they're trying to make 20-30% a year, and she's making 18,000% or whatever that percentage gain is. So try to get this. We're trying to share this podcast, get real sound advice out to these beginner traders, because they are absolutely being hammered with clickbait garbage nonsense every single day, and it absolutely drives me insane. So that is why I started this podcast, and that is why I will continue to do this podcast for you guys. So make sure you guys subscribe to my YouTube channel there. So the reality is that most traders are hopping from one strategy to another. They are chasing the perfect system, which does not exist. The perfect system basically is whatever system works for you, and pretty much any strategy can be profitable. I'm sure there are some that are better than the others. But again, it's all going to depend on how you implement that, that trading system. So the topic of the day, obviously, it is talking about traders who are hopping from one strategy to another. And I'm going to be going over why they're doing that and the issues of doing that. So again, the big reason they are doing that is because they see these thumbnails on the YouTube videos, and the classic thumbnails: 90% win rate, $100 a day, 85% win rate, 90% win rate with this one strategy. And you go to the person's YouTube channel and they have 35 videos on this one new strategy with 80-90% win rate, and they are constantly just switching strategies. In reality, they're not actually switching strategies. They are just coming up with a whole new system that they can show in order to get you to buy their course, I'm guessing. So that is why they are constantly switching the strategies, because there's only so many people who trade supply and demand. There's only so many people who trade support and resistance. There's only so many people who trade chart patterns. So when you sell all the courses you can to somebody who trades support and resistance or supply and demand, then you need more people to join your course and buy your book or whatever. And so that's why you quote unquote switch strategies as, the YouTuber or guru or whatever you want to call them. So that is why they are switching strategies. They're not switching strategies because they found it's better than this other one. Look guys, I've been trading supply and demand this entire time. I did a little bit of support resistance when I first started trading, but pretty much 3 to 5 months into it, I switched to supply and demand trading, and I've never traded any other strategy. I mean, I have messed around with some trading with the trends and stuff like that, but it's been mostly supply and demand. If you go on my YouTube channel, FX Telepath, all my videos are supply and demand trading. I could probably grow my channel so much more if I simply, for example, I get so many people commenting, can you make a video on ICT and FVGs and BOS, break of structure, all this stuff? And I don't really know too much about that stuff. So I'm not going to make a video on it. It's really that simple. However, if I wanted to make more money through my YouTube channel, all I would do is I would go and I'd maybe just take a free course on ICT or whatever, and I would just try to learn that, and then I'd start making videos on that too, so I can get the ICT people over to my channel. Because you know what? When somebody trades ICT or fair value gaps or whatever that stuff is, let's just say somebody trades support and resistance, and then they see my channel, supply and demand, they click off of it because it's not their strategy and they don't want to learn it. And that's reasonable, that makes sense. But if I start to do a bunch of different strategies on my channel, then I'm going to get more viewers and I'm going to sell more courses. And that is why they are doing that. So a big reason these beginner traders are switching strategies is because the people they are watching are switching strategies too. Oh, I'm going to try this. Apparently this has a 5% win rate. And it's all just selling a dream of getting rich quick. So, and they also, when they see 90% win rate and $100 a day, and then they buy this guy's course or whatever, and they learn from him, and then they don't win, and then they take 4 losses in a row, or they don't make $100 in a day, then obviously they're going to probably switch strategies. And actually, if you just let that strategy play out, it might actually be profitable, right? But since you are expecting these astronomical returns, 90% win rate, $100 a day, $500 into $500,000, they're expecting that. So when they don't get that within the first month, obviously they just think that the strategy must not be working. In order to make in order to turn $500 into like 500 grand trading, I mean, just look at those returns, think about those returns, and trade, and then you tell me if you think that is possible. It is not. I mean, I'm sure you could get lucky. Like, the only way you're doing that is like by, quote unquote, I'm doing air quotes right now, you guys can't see, quote unquote, trading Bitcoin when Bitcoin got that huge, massive push up. Other than that, you're not making that much. That's why I always tell people too, get rid of this idea that you're going to grow your trading account. You can definitely grow your trading account, but let's say all you have is $500 that you can put into your trading account. That's fine. I think that's great. As long as you are comfortable with losing that full $500, that's perfect. And trust me, if you are in my group and you are taking psychology advice from me, you will never lose that $500 because you will be risking no more than 1%, and it's almost impossible to lose all that $500 risking 1%. You're going to get so many winners. It doesn't matter if you're just randomly pressing buy. It doesn't matter. You're not going to blow that account. So I'm just going off on a tangent here. Remember, guys, I have little notes when I do these podcasts, but it's pretty much just going off of, how I feel. So they aren't letting these strategies play out in the long run. They're not getting that 90% win rate in the first couple weeks, so they just move on. And that's the problem, is they think those are the returns that they're going to get. I always tell people, if you do anything better than the S&P 500 or average of the S&P 500 trading, taking 300 trades a year, you are doing amazing. So think about this. Let's say 5 years from now, you're doing really good at trading. You are making a decent amount of money trading. Maybe you have other side businesses or whatever. And then also you're investing your money in the long run. Let's say you make 10% trading a year, and then you make another 10% with your S&P 500 investing. That's fantastic. I'm sorry that everybody thinks that you have to make 300,000% a year based off of these clickbait thumbnails I am seeing on YouTube, but that's just not reality, and that is why I'm here, and that is why I'm here to tell you that, and that is why I do these podcasts and these videos, guys, because it makes me absolutely sick thinking of these people basically preying on beginners. And how many times I get messages, emails, "Hi Kevin, I really want to join your group, but I don't have any money right now to join your group." It's like, okay, that's perfect. Then watch my videos on YouTube for free. Work on getting a better job so you can have more money, because you're not going to turn your leftover $250 into 250 grand magically in a year. Think about if you have $500 trading account. Let's say you make 100% every year, which you're not doing. Okay, you're not doing, but let's say you make just a measly 100% a year, just a little bit. Okay, so your $500 is now $1,000. And then you make another 100% the next year. Okay, you're at 2,000. Then you make another 100%. Okay, you're at 4,000. Then you make another 100%. You're at 8,000. Then you make another 100%. You're at 16,000. So that's 5 years of making a 100% return every single year, and you only have $16,000 trading account. Now, remember, guys, $16,000 is a lot of money. Don't take it the wrong way. Everybody's on a different life path. $16,000 to me is definitely different than somebody who can only put $500 in their trading account, and that's fine. Everybody's at a different life path. But again, I'm here to slap everybody back into reality. Think about that. 100% return starting from $500 after 5 years, which is a long time. You don't really have that much going for you, right? I mean, it's great, but it's really not that much. Yes, of course, after the 10 year, that that 16 grand is going to turn it, I'm not going to do the math there, but it's going to turn into a lot of money. But my point is, that's 5 years. And if you're 3 years in and you're making 100% a year, let's just say reasonably, let's just say 20%. What you want to do is keep putting money into your trading account, right? That's why I tell everybody, get a good job so that you can put money into your trading account if you are profitable. You're not going to grow your account making, 10, 15, 20% a year, which are semi-realistic goals for a trader who's been doing it for a while. And I mean, if it's a really, really, really great year, I think 35, 40%, totally doable. You guys know I don't talk too much about that kind of stuff because, again, I don't want people joining my group and saying, oh, he made this much. Oh, I'm feeling really bad. Or, oh, wow, he didn't have a good year. He only made 5% or 6%. Wow, this guy doesn't know what he's talking about. And in reality, it's just not a great year. And that is the reality of trading. There's swings. You can get swings on a daily basis, right? You can be a day trader and you can go on a crazy drawdown intraday. You could lose 3 trades that day. You can go on a drawdown in a weekly time frame too, where like maybe you're in a drawdown all week. You could also go on a 3-month drawdown. You can even go on a year-long drawdown, guys. This is the reality of trading. But again, the fake gurus on YouTube aren't showing you this side because they're just trying to be hyper enthusiastic. Oh, I learned from my uncle and I turned $500 into $500,000. Sorry, part of my, I don't know. I get very passionate about this kind of thing and it drives me nuts. I had somebody say their risk to reward was 3-1 and their win rate wasn't above 50% yet. And I'm like, okay, like that's still absolutely, I think it was like just under 50%. I'm like, that does not matter. You don't have to win 50% of the time, right? It's absolutely incredible. So again, if you guys are, even if you've been trading for, let's just say a year and you're like, maybe you're like around break even, you're losing just a little bit, you're doing great if you're a year in. Trust me, okay? You're doing great. That's the reality. The reality is we will all go, if you become a successful trader, the reality is you will go from not trading to being a losing trader, to being a break-even losing trader, to maybe winning a little bit trader, and then basically to a winning trader. That is like the proper, path or whatever you want to call it. And it just reminding everybody we're never going to avoid losses. We have to stick to a strategy. Like, again, if you test a strategy, let's say you come up with an entry model, it can be whatever. Let's just keep it really simple. You buy all demand zones in a daily upward trend or something like that, whatever. So you buy all H1 demand zones in a 1-day trend. Let's say after 30 trades, and let's say you're looking for a 2-to-1 risk reward, which is, pretty reasonable. Let's say after 30 trades, you only won 5 of those trades or like 3 of those trades, and all those trades look good. They all had an explosive move away. They all qualified as that proper entry point. After your 30 trade, 50 trade test, if you only won 5 of those trades, I would probably switch to something else or try to tweak it and look at what you just did to see if you can make that better, because that's not good enough. However, if you do a 30 to 50 trade test and you're profitable, right? Then trade that and stick to that for months, right? If you can stick to that for at least 3 months, you can see that risk reward play out in the long run. Okay? So again, if you watch some fake guru's video and he promised you a 90% a 90% win rate, with a 3-to-1 risk to reward, and then 10 trades into it, you've lost 8 trades, then he just lied, because you're not going to see that risk to reward flip, because 90% win rate, you're not getting 8 losses in a row like that. So that's not going to happen. So he lied. So I'm just saying, but if you have a reasonable win rate and a reasonable risk reward, it might take a few months for you to let that risk reward play out in the long run. Something that happened to me in my trading journey was I was trying to change strategy just a little bit, trying to just see what else I could do. And not change strategy. Trust, when I say that now I feel like I just messed up, but I did not say change strategies as in I went from supply and demand to chart patterns or something like that. I just mean my entry model change, and I was basically trying to look for like little 2-to-1 trades instead of my typical 4-to-1, 5-to-1 setups that I like. And basically I just found that over that month that I was doing it, the trades weren't really going to that full 2-to-1. They go like 1-to-1, 1.5-to-1, and then they'd go around and then they go and they would break the zone. I'm a supply and demand trader, so they go and they break the zone after going 1-to-1, 1.5-to-1. So I'm like, oh, maybe I need to just look for 1-to-1s. And then sure enough, as soon as I started looking for 1-to-1s and like 1.5-to-1s and just being a little bit more aggressive with my profit taking, basically what happened is all those trades started to go to 2-to-1. Not all of them, but like a lot of them did. And then what I realized was like, oh, that was just that month of me not getting those 2-to-1s as much as I wanted to. Wow, it was just a bad month for that, or whatever it is. Like, I don't even know why, but it just, maybe if I just kept going and going, and if I did kept looking for that 2-to-1, I would have made more money. I mean, I still did good with the 1-to-1s, but I would have made more money with the 2-to-1s if I would have just stuck to that. And I mean, look, guys, I've been trading for 5-6 years now, so even I make these mistakes. So you're never going to be completely perfect, and it's a battle every day. It's a grind every single day. So that is why I tell people to stick to that system. Again, if you're taking 30, 50 trades and you're in a 50% drawdown or something crazy like that, remember, only risk 1%. If you're in a 50% drawdown, okay, something probably needs to change. So a big reason I'm doing this podcast is to help you guys understand when something needs to change and when you just need to let that risk reward play out in the long run. If you're 50 trades in and you're a month in, let's say you're 50 trades in and a month in, and I don't know, I don't even want to come up with fake scenarios, but like, let's say you're just, like maybe last week you were up 2% and now this week you're like down 1%. You're like right around break even. You're like break even to losing a little bit to making a lot. Or sorry, you're break even to losing a little bit to making a little bit. That's right around, like that's right in your wheelhouse right there. If that is the case for you, you do not want to change strategies. What you need to do is to continue to trade that exact entry model while journaling and writing things down, writing notes. Did the setup, what time of day was the setup? Was it an explosive move? Just all this criteria that you need to write down so that you can find your quote unquote perfect system, and you're tweaking that. Again, if you are in a 50% drawdown, there's no tweaking that. You are changing that. But if you're right around break even after a month in, that's perfect. You're right there, and now it's a minor tweaking that you might need to do. Maybe when you're trading counter trend, you just need to be a little bit more aggressive with your profit taking, right? There's just so many things that you can tweak to turn that winning a little bit to break even to like winning a decent amount, right? A respectable 8 to 10% a year or whatever. And again, you're not going to get there if you just go from one strategy to another. But that's why it all goes back into, oh, well, I've been trading for a month now. I'm 50 trades in, and I don't have my $100 a day yet, and it's definitely not a 95% win rate. It's like, that's why we got to stop watching these guys' videos and don't support them at all. And again, I'm not picking on anybody. That's why I don't name names, but I mean, pretty much everybody does it. I'm sure there are a few out there who are great and who are not using clickbait and numbers. That's why I never show any dollar amount that I made, for many reasons. A big reason is because, again, it doesn't matter what you make. It's all a percentage game, okay? I cannot stress that enough. 8% is fantastic. 8% on a $500 account is fantastic. 8% on a $500,000 account is fantastic. It's 8%, okay? So we have to start looking at things as a percentage as well, not about how much money that we actually have, right? So I feel like I've been rambling on. I mean, that's why I do these podcasts. Anyway, it is hard to do these podcasts alone, right? I got to talk for so long alone and with my notes. That's why I kind of wanted to have more guests on here and see where this podcast can really go. So the danger is never the strategy. It's pretty much your mind behind it. Again, we have to, if you're testing a strategy, you have to figure out, is this just a drawdown? Do I just keep going and just try to tweak this? Am I journaling this? That is what we are trying to figure out when we start to trade that strategy that we are testing. So, again, just to tie everything back in together here, because we will be wrapping this podcast up soon, we need to shift the measure of success to if we followed our plan or not, and if we are journaling or not. The profits will only come. So we need to be stoic about it. If you lose, don't be upset, journal. But also, every time you take a trade, look at the setup for at least a minute and say, is this the setup? Is this my plan, or did I miss the plan? And if you hit the plan, if you did the plan and the trade lost, that's it. Mark it down as a loss. Maybe do your little journal thing where you write down the criteria of that zone, and then maybe you'll find something out later. But a lot of the times people will send me a picture of a trade and they'll say, what went wrong here, boss? They call me boss sometimes. I don't really like it, but it's funny. I hate when people call me boss. I'll go into some stores around where I live and it's like, what's up, boss? What can I do you for? It's like, don't call me boss. I don't need your psychological manipulation. Not that the people that are calling me boss are trying to manipulate me, but you know what I mean. Anyways, I forget where I was going now, damn. But they'll send me trades and the trade looks good. It's a great supply zone or demand zone or whatever. And they say, what did I do wrong here? And I'll look at it for a second. I'm like, okay, the zone looks good. The basing's decent. There's an explosive move away. Perfect. There's nothing you did wrong here. So what you need to do is just take your journal out, mark down the criteria of that zone, and then basically move on and look for that another setup. It's really that simple. But there will be times where, okay, yes, I'm looking at your setup. There was actually no explosive move here, so this is not a demand zone. So you need to change that and tweak that so that you can fix that issue, because that is an issue. There's a difference between an issue and just a natural loss, right? There's literally natural losses that can happen. They're totally normal, right? It can be the picture. I tell people all the time, the best zones can fail and the worst zones can work. I can see it all the time. And I'm very honest with the people in my group. I will show a zone that worked and I'll be like, look, I wouldn't have taken this setup. It's just not a good zone. But I'm having this on my charts. Again, it's my chain analysis. I'm not going to go into detail on a podcast about that. If you want to learn about that, you can follow my YouTube channel at FX Telepath. But so we need to learn when we are doing something wrong and when it's just a loss in the grand scheme of things, and we need to let our risk reward play out. Stop letting these crazy clickbait claims and all of these fake claims from these traders who they have a wait list to get into their group, and act now, 90% off. It's a $5,000 value for only $1,000, right? Like just crap marketing like that. Again, just completely trying to psychologically manipulate beginner traders absolutely makes me sick. And with that being said, guys, we are going to wrap this podcast up. But what I want you guys to do is these practical steps. So commit to testing one strategy for at least 50 trades before making changes. Okay? And I mean before making any changes. And this is for testing. This is not for trading real. So if you're going to go to back test, let's say you want to go back test, commit to that one strategy. Come up with an entry model, right? Like test things out a little bit here and there before you actually commit to the legitimate back test. Come up with a strategy specific, right? Get specific. Take 50 of those trades in your strategy before you make any changes. And then maybe you notice something in your back testing journal that you need to change. Take another 50 trades, and if you have, somewhat 50 trades is not enough of a back test for me, but the 50 trades is enough where you can kind of see if that strategy is going to work out, right? Obviously, if you're looking for a 1-to-1 risk reward and after 50 trades, you won 10 trades, it ain't working out. So there's a difference, right? And we all need to learn when to do that. So stick to that strategy for at least 50 trades, tweak what you need to, do another 50 trades until you have something that looks good that you can actually start to trade live, again, with a very, very small risk. I don't even recommend risking 1%. So let's say you come up with a strategy, let's say you're backtesting 50 trades, you tweak something, and you backtest another 50 trades. Then you want to trade live. You put the money into your account, but maybe you already have money in your account. Continue to basically test that, but live, where you can actually start to get emotions behind your trades, right? So, and then from there, risk 0.5%, 0.25% until you feel more confident trading it live, and then just slowly, every month, work your way up. Every month you have a good month, increase that so maybe start with 0.25% risk. If you have a profitable month, go to 0.5%. Another profitable month, you're at 0.75% risk. Another profitable month, you're at, and then keep in mind too, let's say you start at 0.25% in January risk. You're in February, you made money. That strategy has been proven to be profitable over that month. Now risk more. Now you're risking 0.5%. Let's say February, you made more money again. Now in March, you're risking 0.75%. But let's say March was a down month where you did not make money, you actually lost money. Hopefully not too much. I wouldn't change that risk. I would for April, I would basically keep that 0.75% risk, right? And then the month after, and then after April going on, just keep increasing until you get to 1%. That's all. That's pretty much max. I mean, if you know your strategy well, you can definitely risk 2% on setups that are very good. So stick to that risk and that strategy for at least 50 trades. We need to journal every urge to switch and write down the emotion behind it. I think that's a good concept as well. So if you are feeling like switching your strategy, write it down and read it. If you're writing down, only 5 trades were a winner and 50, okay, then change it. But you need to write down why you feel like switching your trading strategy. I think that's very important. I am not a huge fan of doing journaling emotions and stuff like that. I just found it never really helped me out too much because, I already knew what I had to do, but it might help for you guys. We need to reduce our exposure to clickbait trading content. Less noise, more clarity. And Instagram's really bad for that as well. I'll click on their post and it's one of those carousel posts and, where it's like multiple pictures on carousel. Yeah. And like the first picture is like a trading desk or whatever. And then the next one's maybe the trade. And then it's just like a Porsche and then a Lambo, and then like an expensive steak dinner or something like that. And trust me, the only time I will maybe post a steak dinner every now and then. But they are like, we need to just get rid of that because it's all getting into your psychology. And it might not even it might just be in like your subconscious where you deep down, like maybe that you're not getting a Porsche next year, but maybe if you keep watching this stuff, it's going to mess with your head. And then that first month of not getting that 90% win rate, you're going to be like, where's my Porsche, right? And that's a part of maturing and trading. Look, I wanted it too. I literally remember when I first started trading, I'm like, wow, this is going to be so easy. I'm out of here in 6 months and I'm going to have my Lambo that I want. And I'm going to buy my parents a new car. Like, you know what I mean? I thought all that stuff too. And then the market slaps you right back into reality. So think about that. Every time you go to trade, think about how hard trading it is. And then these people on YouTube are saying they turned $500 into $500,000 trading. It's like, that's incredible. It just makes me laugh. It's sad though. It's really, really sad. So reframe losses as tuition for mastery instead of proof your system does not work, right? So if we are losing, maybe it's just that tuition to master that strategy, or maybe those losses are just going to show you what you need to tweak to make your system work. So those are the things I want you guys to do, the next couple months. So reminder, a little bit of a Stoic kind of quote here. The market does not demand a new strategy. Again, we talked about how sometimes it might, but The market does not demand a new strategy. It demands a steady mind. Okay? Impatience is the real loss. Discipline is the only edge that endures. I saw a great little Instagram reel type thing where it was two stick men walking. And basically, they were both walking they were both jogging. They were both jogging at a nice pace. And then one of the stick man above them had discipline above him. And then the other stick man had motivation above him. And it was funny because the discipline stick man, he was just doing that steady pace jog, just steady, nothing changes, just steady, moving along. And then the stick man with the discipline above him, he would overtake the person with discipline. He'd shoot up ahead. He'd get like 10 feet ahead of him, but then that motivation would die off, and he would immediately go right back and even further back than where the stick man with discipline was, because discipline is the only edge that we can pretty much have. I mean, there are edges that we can have, but discipline is the only edge that's going to let you and allow you to keep that edge, guys. So, and a discipline with anything in life, right? I've been very good the last 3-4 months with working out. Everybody knows I had my first kid, so that kind of threw a wrench into everything, but I've been right back to it. I've been working out pretty much every day for the past 3 months, and I've seen the results. It's crazy. And it feels so good. It reminds me of my trading journey too, where like there was times where I'm like, this isn't worth it. I'm not going to make it. Like, what the heck is this? And it's the same thing with working out, where like you're in mid set and it's like your 4th workout of the week. And you're like, I'm not seeing any results. And then you just do it. You don't even think about it. You just keep working out, right? And I work out at home. I hate going to the gym. I work out at home because I just know myself. I know that if I had to go to the gym, I would just be lazy about it. So that's why I work out at home, because I know that working out at home is where I can keep my discipline up, and I'm finally starting to see results. And the crazy thing about that is when you start to see the results, it just makes you want to keep going. Like now it's like, oh my God, I can't stop now, right? I mean, my physique is way better. I feel way better. I'm way stronger. There's no way I can stop now. And that's the beautiful thing about discipline, is when you have discipline for 1 to 2 to 3 months, you will really start to see changes. And it does not matter what it is, whether it's trading, working out, a work thing, whatever, guys. It's just an amazing thing. So anyways, guys, I appreciate everybody here. Make sure you share this to any beginner traders, okay? Share my YouTube with them. Share my podcast with them. And again, I get that everyone's doing that. All these people that are doing the $100 a day, they're asking everyone to share their stuff too. And that's why I'm asking you to share my stuff too. I'm competing with them, but I'm competing them for a bigger reason than getting your attention. It's because they are psychologically manipulating beginners, and it's disgusting. So anyways, guys, appreciate everybody. Make sure you subscribe to my podcast to get this podcast going, and I'll see everybody in the next podcast.